But remember, it's the tire stocks which have been very active of late, what with the cool off coming in crude prices and, of course, rubber prices as well, which are aiding this particular move in tire stocks. So let's welcome on board Satish Sharma, the chairman at ATMA and President, APMEA, Apollo Tyres, that is. Mr. Sharma, great to have you on the show today. Domestic tyre industry is expected to be 1 lakh crore rupees, we understand, in turnover from the current 75,000 crores. What do you think is going to fuel this growth, and how much is needed by way of new capacity addition for this kind of a target?
I mean, see, the capex figures, what we have mentioned is an estimate of what the total industry is doing. So I cannot specifically answer how much more capex is needed, but the industry has sufficient capacity to fuel growth. That's the moot point. So we have invested in the downturn during the pandemic, and now we have the capacity to exploit the growth as it happens in the economy.
Sure. How big then, Mr. Sharma, you think a role will replacement demand play in this particular growth trajectory? And how is it that you see growth in new tire demand as well shaping up?
Interestingly, now there are multiple channels of growth for the industry. Replacement continues to remain a very significant one, but also the other two channels, OEMs as well as exports, have become fairly significant. And when you granulate it category to category, for example, in agriculture, OEM still remains the dominant channel. And exports also has become a significant contribution to the top line.
Good morning. Nantar also joining in on the conversation. Would love to get your views on the growth that we're seeing in the overseas market and the outlook on exports.
So let me take the second part first, the opportunity question. I think the industry has had a structural shift now, fueled by the fact that the vehicle park is as contemporary as it is in the rest of the world, fueled also by the fact that the government has been bringing in regulations which is mirroring the vehicle park to the rest of the developed world. For example, the BS6, which came in 2020. And other regulations also. For example, for the tire industry, OEMs have all radialized in most of the categories. Car is 100% radialized, CV is 70-80% radialized. Now, which means that our product portfolio in India can address technologically most of the world markets. And that is what is playing out. So that structural change has enabled companies to look at the addressable markets, which is the rest of the world, in a broader sense, and that's fueling the exports growth.
So in the past 1 year, tire companies have suffered a lot due to commodity inflation. What is the outlook on raw materials in the near term? Do you expect it to cool a bit more or stay at the same level?
That's a difficult one for the time being, because as you know, our key stock raw material still is the crude oil, and much of our raw material is crude derivative besides the natural rubber part, but there's a lot of synthetic rubber used in many of our specifications. So crude oil is the central, and if you can take a bet on where crude oil is likely to go, we could also then, so as of now, the trend is it's softening, but will it continue in that trajectory? Is difficult to say. One can only conjecture to say, there are slowing economies in the world, and the central banks around the world are battling inflation, and which may moderate demand in many geographies. And therefore, structurally, it seems that the peak of the increase is behind us, and now we are in the softening part of the raw material cycle.
And what is your outlook when it comes to growth in the EV tire category? Which company is expected to be the leader according to you?
So EV is still, the figures look staggering because of the base effect. Otherwise, I would say, yeah, EV is promising. It was accelerating fast in two-wheelers. In the four-wheeler, it is a modest play so far. The IC and the hybrids, etc., are still the dominant and are likely to remain dominant for time, for a few more years to come. Nevertheless, the year-on-year growth will always look handsome. And amongst the OEMs, as you would already know, there are a few companies which are taking the lead. For example, Tata Motors is fairly strong on the EV with almost 60-70% of the market. But there are others which are coming in with their products. As far as tire industry is concerned, our readiness for the EV technology is there. Most of our partner companies have launched their first offerings on the electric vehicles. And as the market is driven more and more in that direction, I do not think that the tire industry is going to be found wanting. From a technological perspective, we will either match the pace of the EVization or even remain ahead of the curve.
Right, we're going to leave it at that. Thank you so much for joining us today on the show, taking us through, what your expectations are from the tire industry for the new year of 2023.